Alrighty, last breakdown of the week, guys and gals. I feel like I have a really good breakdown for you all. I want to first give you guys a full breakdown and XRP update, primarily because we've had a change in the scalp deltas. So we're going to go over some levels to be mindful of what we were talking about all week. Just show the general public the level of accuracy that we operate with here in this community. I'm going to physically place some of my tweets on the charts, show you guys how I was both calling out bottoms and tops this week, back to back to back, by utilizing some of the data and the software that we give you guys in the private community so you guys can see that you have the same access to the tools that I use to make these insane call outs, right? I want to go over Canton Coin's update. No levels have changed, but we're again just paying attention to key levels to be mindful of heading into the weekend. So I'll highlight those as well. We'll go over the total cryptocurrency market cap. I want to kind of highlight something that I think is on the brink of happening, how we could possibly be in an accumulation phase where we are at the quote unquote local market bottom, where there might still be some down way to go. I want to touch on those levels real fast. Just take a look at some possible accumulation schematics that could build up in these ranges that we're trading at right now, and then just kind of go over the market sentiment. Then we'll touch on the fundamental report. I'll fully break down today's environment. This will go over in detail the risk off backdrop so that way you guys have a full understanding of everything that I've been paying attention to this week for you guys accurately, keeping you all up to date and in the loop. So that way you all are fully informed before we head into tomorrow and into the weekend as to what we need to be mindful of paying attention to and where the current landscape is at. So nobody is confused in this community. And then last but not least, I will break down one of my trades for you guys today on MNQ. I had a $6,000 trade today on MNQ. It was phenomenal. And I want to really break down things a little bit more in detail, doing something slightly different for you guys in terms of the way that I break down price action today on the 1 minute time frame. So we'll get into that towards the end as well. So hopefully you guys enjoy this Thursday call. Aqua let you guys know that his call is going to be postponed until tomorrow. So that's awesome. Thank you for that update, Aqua. So starting off here with XRP, before we get into the levels, the deltas, the updated dark pools to be mindful of heading into the weekend. I said to you guys here on February 22nd, at the very beginning of the week, 2026, XRP is currently approaching the daily buy wall at $1.34, which is a critical level to watch. If buyers are able to defend this area, absorb the incoming sell pressure, and begin to trap sellers, it could shift momentum back in favor of buyers. The key confirmation will be whether buyers can become aggressive enough to break above previous sell walls and convert those levels into support. This type of behavior shows strength and control returning to the buy side. If buyers successfully defend and regain momentum, I will be watching closely for buy scalp opportunities throughout the week, with upside targets potentially ranging between $1.45 and $1.99. And I had caught the absolute bottom of this trade. I made $11,000 this week trading XRP. And then so you can come over to TradingView and you can slap this tweet on the charts and you can see at the exact bottom here, right before we liquidated this low, this is where I mentioned to you guys that price action was coming down into our $1.34 psychological level to be mindful of. All right. And so just I'm showing you guys here, this is the level that we are paying attention to, myself and Scalper in the chat. Price had a nice rally up into roughly around the $1.34 area. Breaking that down real fast. Why was I looking at $1.34? Outside of there being some sell walls existing over here, we can clearly understand that anytime sellers, stop losses are taken or price comes up into a previous high, we know in this community that there is a chance for sellers to defend at these previous levels where they had trapped buyers before and became aggressive enough to push price to the downside. And so you can see clearly that $1.45 was an area of interest where we were likely to see a battle between buyers and sellers. So my thesis was that if buyers are not able to sustainably break above $1.45 and push higher, then we're likely to see a retracement back down into previous areas of support. And so, sure enough, I noticed that buyers were getting trapped at highs, which is why I have a blue circle on my charts. Over on the order flow, we could see blue circles, i.e. buy volume trapped at these highs, failure momentum to push aggressively through previous resistances, and we started to see sellers gain the upper hand. And seeing that, I said to you guys right here at the top, on February 25th, coming over here to that post, I said to the downside, a retest of $1.40 is on the table if buyers cannot keep up the current aggression we saw today. A break below $1.40 opens up the door for a price revisitation of around $1.35. And again, just copying this post and taking it over to the trading view charts, you can see that I mentioned this right at roughly around $1.48, right? So right at the local top, and price came straight back down into $1.40. All right. So I'm just trying to show you guys that level to level, you can call out the bottoms and the tops in the market in this community. It is very possible. We do it all the time. It is not some gimmick. I'm here to motivate you guys and show you that anybody that puts the elbow grease in and pays attention to the info that we put out in this community, you can do it. All right. So what are we paying attention to moving forward? Taking a look at the updated levels. I know that they're a little tiny here, but these are the updated dark pools and deltas to be mindful of and pay attention to. So I have them on my charts for you guys. Let's just go to the higher time frame and take a look at those levels. All right, so right now on XRP, as long as price is trading above $1.34, which is where the daily support currently sits at, there's a support wall on the order flow that sits at about $1.34. And we can see recently sellers were unable to gain the upper hand at buyers. They got trapped at lows. Buyers became aggressive and tried to make an attempt to push price higher. Recently, however, buyers have failed. All right. So if we can see another revisitation of around $1.34, even if price slightly dips beneath it, and we can see buyers maintain control of this level, we could see another attempt by the buyers to make a move on the sellers and push price higher. If we see that and buyers hold at support, the next higher level to be mindful of is roughly around $1.50. We need to break the local high where buyers were recently trapped. If we can see buyers overcome that level, turn it into support, that's going to open the door for the next sell dark pool at about $1.62. All right. If we don't see a revisitation of $1.34 and price maintains support at $1.40, we could see the same scenario where buyers gain the upper hand where we're currently trading at, and we could start to make our way back up to $1.62. Outside of that, if $1.34 threshold is broken, the last bullish target that I will be mindful of trying to make an attempt to see buy positions take place over the weekend is $1.27. All right. That'll be the last area where I look for buy scalps. If $1.27 is broken to the downside, all right, to the downside, I'm not really going to go over any full technical analysis, just paying attention to some levels. If $1.27 breaks, the next area of interest we're likely going to see materialize is $1.18, where buyers could make an attempt to defend at a previous low where they had bought from all the way back at the beginning of February. I will wait for confirmation. I'm not going to attempt to try to catch a falling knife. So if we break into $1.18, the reason why I said I'm not going to be looking for immediate buying opportunities is because we could see buyers try to make an attempt, push up back to $1.27, sellers gain the upper hand, and then straight smash all of the buyer stop losses who tried to buy the bottom at $1.18. So with that being said, if we did come back down into $1.18, I would wait for a confirmation and a break back above $1.27 to see that turn into support, see buyers accumulate orders, trapping sellers and becoming aggressive and pushing back above previous highs before I look for any buy scalp opportunities. All right. If $1.18 breaks, the lowest level dark pool right now on our radar in the form of scalp deltas and dark pools is 91 cents. I believe the lowest level delta, I don't have the deltas on my charts, just the dark pools, but the lowest level delta still resides at about 77 to 34 cents. All right, so just be mindful of that. Those are some extreme targets, but they are, our software is highlighting them. So just be mindful of those possibilities. Okay, that would obviously, of course, be or result in some type of catastrophic liquidation event, some war escalation announcement, some major risk off event that is still lingering in the background that hasn't unfolded yet. All right. So you guys have both upside targets. Actually, excuse me, we didn't go over upside targets. If at any point in time the sentiment changes, okay, and $1.62 does break, which is our most immediate bullish hurdle that we need to overcome before we see any higher prices or get excited on any higher levels on XRP. All right. If we do break above $1.62, the next two levels to the upside that we need to see broken aggressively and turned into support by buyers is $1.77 and $1.98. Until we see all these levels overcame on XRP, all these bullish Moonboy price predictions and all that stuff that you guys see on the internet, completely just avoid watching them, because we know in this community that there are passive sellers that are sitting at these highs that are ready to absorb any buyers that come into this area. And if that happens and we don't see buyers break aggressively above this, it's just going to result in a deep retracement. All right. So it's great that we have these insights. So these are the levels to the upside that we're going to be mindful of. And now you guys also have the levels to the downside to be paying attention to. Canton. Canton. It looks like that wick down to 14,801 on MEXC is holding some ground. I mean, I'm surprised that we didn't see it on any other exchanges. Have you guys checked recently? Rhetorical question. You can answer it at the end. I don't know if you guys have checked to see if it registered on any other exchanges, but this wick that you guys can see I'm on MEXC right now did tap down into our institutional dark pool at the 14,801, where we have recently seen a trapped seller and price has since recovered. We're currently trading back in that consolidation range between roughly around 17.5 to 15.5 cents. And so right now it seems like to me, Canton Coin is in some form of either reaccumulation phase or distribution phase. So with that being said, if it's in a reaccumulation phase and we're seeing buyers overpower sellers and they're able to become aggressive, we're likely going to see these levels defended, whether we see a drop back down into 14,801, a break above the accumulation, turn it into support, and then trail higher. Or we're likely to just see price continue to where we're currently trading at now, turning the top of this range into a support after breaking out, and then starting to make its way into upper levels. Those are the two bullish scenarios right now that I'm paying attention to on Canton. I'm personally hoping that we don't see that because I would like to buy a lot more Canton at lower prices. So with that being said, if we cannot break out above this accumulation range that we're currently trading in, turn it into support and trail higher, it's likely going to turn into a distribution schematic. We're likely going to see sellers continue to defend passively at these previous highs. We're likely to see dark pools rejected, supports broken, and lower highs made, and that's likely going to transmute into lower prices. The first area that I would assume market makers are going to target are any over-leveraged MEXC traders that will able to get in at this dark pool with leveraged stop positions beneath this low. So that would open the door for a revisitation of 14,801. If we do see that register on exchanges where I personally buy Canton, I will be looking to accumulate some Canton at that level. All right. If 14,801 breaks, of course, that still opens the door for the next dark pool to the downside at the 12,257, which we've been waiting on for some time now. It seems like it's not happening, if I'm being completely honest. I hope it does, but Canton's been holding relatively strong. The market over the last 3 months lost over $1 trillion in value, and this is all that Canton did. It literally just pulled down and then ranged in between two dark pools the entire time that crypto lost over $1 trillion in the last 3 months, which is insane to me because that seems like it's a safe haven asset or it's actually a network that's being utilized for its underlying utility. This to me was a huge green light for Canton's price action and Canton in my portfolio. All right, so total cryptocurrency market cap, real quick. We were able to slightly break above, which we'll talk about briefly in the report that we're going to read here in a second, but we were able to briefly break above this week the $2.3 trillion dark pool. You can see that currently we're trading slightly back above that. So taking a look at this on the higher time frame, the reason why I'm talking about this being an accumulation or redistribution schematic is because look back at the price action in terms of just the last couple of months. Every single time that price for more than 2 or 3 weeks has trailed sideways, a breakout of some degree happens. So here you can see, now I'm not saying a breakout to the upside, no, a breakout to the downside as well. This you can see here was a distribution schematic. Price redistributed at the highs, buyers were trapped, sellers became aggressive and pushed price to the downside. Boom, we get into this next consolidation phase. All right, same thing. Buyers tried to make an attempt to become aggressive. This is when we were at that $3.2 trillion threshold. We saw buyers get trapped and price distributed to the downside. All right. We are now, it's seeming like, in another accumulation or distribution phase. So right now you can see price action is trailing sideways. We're currently hovering around an institutional dark pool, which means that there is both a battle between buyers and sellers right now at this institutional level. Which one is going to win is the question. So using logic, we know in this community, if supportive fundamentals of risk assets via some of the things that we're going to talk about in a second support a risk on backdrop and profit taking in the safe haven landscape, then we're likely going to see a breakout of the schematic to the upside. And we're going to see some of these overarching hurdles 2.6, 2.8 trillion, 2.3 trillion dollars overcome, right? Doesn't mean we're going to see a full-blown bull market, but if we can get out of this pessimistic slump that we've currently been trading in over the past consecutive couple of months, we can see a dial back on some of these headlines, then it's likely going to result in some bullish price action activity to get slightly excited about. All right. So in that scenario, which again we'll go over here in just 1 minute, so you guys clearly understand that. A slight breakout to the downside to revisit these lows is still on the table. That brings us back down to 2.05 to slightly below $2.05 trillion, where we could see sellers absorbed, buyers trapping them, becoming aggressive, and pushing price back to the upside. Second scenario, a medium retracement down into the middle of this consolidation range. Same thing, a breakout to the upside. Or in a bullish scenario, if there's an announcement in the next consecutive couple of hours or over the weekend or next week, and we see some type of major news headline that Iran and the United States aren't going to go to war with each other, we could just see a breakout from where we're currently trading at now. The next hurdle to the upside that we need to break above, see buyers overpower sellers at, is $2.6 trillion. If we can see that, then that opens the door for 2.89. Or I'm sure we'll have another update before that unfolds, unless we saw an extremely bullish risk on environment. And we saw this past week how just in one day, you can see 140, $150 billion come back into the market just because of some lift in the risk off sentiment. All right. So just be very mindful of that. To the downside, all right, we still have on our radar below $2.05 trillion, the two dark pools that come in at 1.84 and 1.71, which I'm personally hoping for. Think about it. It's so super crazy to be on the right side of history. If we were able to buy crypto at one, I mean, for most of us, some of us in this community were able to buy below $1 trillion market cap, right? But you're here now before institutions come in. And if we get the opportunity because of some risk off event, yen carry trade unwinds, further escalation in Iranian tensions, hawkish leading Fed, more data that supports a pushback on rate cuts, continuing to dry out liquidity from global markets, right? And we continue to see a drop down into these lower levels. That is an opportunity of a freaking lifetime, not time to be scared, in my opinion. Because what I think is happening right now is we are in the accumulation schematic. If we go to the higher time frame, I showed you guys the other day on the Zoom call, looking at the last biggest pullback in crypto history, okay? This pullback from 2021 to 2022 when the market bottomed out was $2.3 trillion, okay? We recently just lost the same amount. You can see from the local high in October all the way down to where the bottom is currently trading at 2.23 trillion. All right. So in my personal opinion, I'm not saying that the bottom is in, but I think that we are relatively close to a point where we could see accumulation where people are starting to facilitate orders and absorbing the sell volume that we've seen over the past consecutive couple of months. Now, like I mentioned, we could see a scenario where things slightly worsen, which could send us beneath the local low at 1.71 trillion. All right. But still on the higher time frame, that is a case for opportunity because what's likely going to happen is accumulations from those lows and a market recovery to some degree. Right? Higher time frame. Okay. I don't see the market from here losing another $1 trillion. I mean, that would be freaking crazy if it did. And I don't think it's something that we should avoid if it did happen. Like it's possible, but how likely is that? I don't think that that's very likely. So I'd go outright and assume that we are relatively close to a market bottom and entering into an accumulation phase where we might move sideways for a couple of months until the landscape completely shifts out of this risk off tone and environment. But still, nonetheless, I feel like we're close to that, right? A couple of months, maybe. All right. So with that being said, so you guys have downside targets, upside targets. Now let's talk about the landscape. What took place this week? Why did we see the market rekindle some of its gains this past 24-hour trading session after a rally that we saw midweek? Let's break that down, and then we'll also discuss and talk about what to pay attention to in the coming days ahead. All right. Risk assets came under renewed pressure today, with the total cryptocurrency market cap shedding nearly half of its weekly gains and falling back below the critical $2.3 trillion threshold that we had previously identified as a key support level required to sustain higher prices, which we're currently trading at now. This decline reflects a broader shift in sentiment across global financial markets as investors, let me zoom in for you guys, as investors reacted to a combination of hawkish central bank commentary, persistent geopolitical tensions, policy uncertainty surrounding tariffs, and the classic buy the rumors, sell the news reactions in major technology stocks like Nvidia, right? How many people are in this community that you guys are on Twitter and you've seen like Watcher Guru or somebody on Twitter be like, what the heck just happened? Look at this manipulation. Nvidia rallied and now it's back down, blah, 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 right? All that bull crap. I know it's happening. I know it is. Futures markets also retreated alongside crypto, reinforcing that this was not an isolated crypto specific move, but rather a broad risk off adjustment driven by macroeconomic and geopolitical factors. Now, this doesn't mean that doom and gloom, my spelling is off here, that doom and gloom is happening, but does mean that markets are not out of deep waters yet and can react sensitively to negative headlines just as fast as positive ones. At the core of today's weakness was a significant shift in expectations surrounding central bank policy. Over the last 24 hours, multiple Federal Reserve speakers delivered commentary reinforcing that inflation remains persistent in concerns and that interest rates may need to stay elevated for a prolonged period of time than the market had previously hoped. Right. So that is one of the key factors. We know in this community, a more hawkish leaning Federal Reserve does not relatively support a risk on environment. This combination of persistent inflation risk and continued labor market strength is critical because it directly impacts liquidity conditions. Risk assets such as crypto and equities tend to perform best in environments where central banks are actively easing financial conditions and injecting liquidity into the system. However, when inflation remains elevated and employment remains relatively strong, like we've seen in recent reports, central banks have little incentive to lower interest rates quickly. Instead, they are more likely to maintain restrictive monetary policy to ensure inflation returns sustainably to their 2% target. We know, if you guys have read some of the documents in our community, that higher interest rates reduce liquidity in the financial system, increase borrowing costs, and make safer assets such as bonds more attractive relative to speculative assets like crypto and growth stocks. This tightening effect naturally weighs on risk appetite, and today's hawkish, well, it was today's and yesterday's hawkish Fed commentary reinforced that liquidity conditions are unlikely to ease meaningfully in the immediate future. On top of that, we also had Bank of Japan Governor Ueda speaking. And remember, the Bank of Japan monetary policy has been at the top of our hearts and freaking minds. Why? Can somebody tell me why? What happens if the yen strengthens aggressively?
Unwinding.
Right? It's not guaranteed that yen carry trades could unwind aggressively like they did back in 2024 in summertime, but it is possible. And so we know that market participants, when these uncertainties are lingering, tend to favor safe haven assets over risk assets. So adding further pressure, good answer, whoever answered that. I didn't see the name pop up, but pat yourself on the back, paying attention. Adding further pressure to global liquidity expectations were hawkish signals from Bank of Japan representatives. Governor Ueda reiterated that the central bank remains prepared to continue raising interest rates if economic and inflation conditions justify it, stating specifically, our basic stance is to continue raising interest rates if the likelihood of our economic price forecasts materializing heightens. We know that the yen carry trade involves borrowing yen at an extremely low interest rate and uses those funds to invest in higher yielding global assets such as US equities and cryptocurrencies. If the Japanese rates rise and the yen strengthens aggressively, investors are likely going to be forced to unwind these positions, reducing global liquidity and putting downward pressure on risk assets. On the technology stock sector, all right, so we had major earnings reports this week. On the technology stocks, particularly Nvidia, this was huge. Okay, this is one of those things that you guys got to pay attention to that I try to teach you in this community, and I don't see a lot of people teaching it on the internet. Okay, and it's the notion between what the mainstream media pumps out to your face in the form of headlines, right? Breaking news, retail, funnel in and buy this, right? But always peel back the curtains and read the details. And if you see something that is extremely positive, but then you read more detailistically into it, and it's like, yo, why am I reading this report? And the word uncertainty is literally in the report. Okay. then jump out of that buy trade and sell that shit because it is a buy the rumor, sell the news. And that is exactly what just recently happened with Nvidia. And so that's why I try to tell you guys to track these earnings reports in advance because the underlying earnings report came out really positive, and that sent Nvidia stock freaking skyward. And Watcher Guru got a good post out of it and got a $500,000 impressions on it. But anybody that bought into that hype didn't actually read the investor commentary and the rhetoric around the earnings report. And that actually came out relatively uncertain and clouded the futuristic outlook of Nvidia. So, also contributing to today's decline in risk sentiment, despite reporting extremely strong earnings reports and beating expectations across the board, Nvidia's stock fell approximately 5%, highlighting how elevated expectations had already been priced into the market. Nvidia reported adjusted earnings reports per share of $1.62, exceeding $1.53, the consensus estimate. While revenue surged 94% year over year to $68 billion, the company issued strong forward guidances projecting $78 billion in revenue for next quarter, which was also well above the analysts' expectations. That's why the other day we saw it all rally. However, under the hood, markets had already priced in significant optimism, and investors began focusing on longer-term uncertainties rather than the near-term strength. Concerns emerged. So I actually went in and I read the report. You guys can actually read the report directly from the NVIDIA blog page or like Yahoo Finance, or I subscribe to Reuters. I got Reuters terminals, so you could just they like give it to you right away. And anyways, and you had JP Morgan commenting on this. You had all these major banks commenting on these earnings reports, and every single one that I read, every bank that I read, even though the optimism came out, you can see it right here. Commentary, despite optimism, guidance indicated substantial optimism had already been embedded in each share price ahead of the announcement, and skepticism remained, right? So yes, the headline news was positive, but the actual underlying comments from the analysts from all these banks were like, not really, right? A little concerning moving forward. So that's why we saw the major correction. So it says concerns emerge about how sustainable NVIDIA's explosive AI-driven growth will be beyond 2026. Remember, I've tried to teach you guys. Remember that lesson about the Federal Reserve? What was the one thing who was on that lesson I told you guys that the markets do? Can somebody tell me?
Prices in future
They
expectations.
price, good job. They price things in advance. So if the actual news came out positive, that's great. But if after the news came out all positive, all the analysts that run these banks, the banks being the investors in these big projects, were all uncertain, right? Well, then what do you think the market's going to do? If they're projecting an uncertain environment beyond 2026, even after positive news came out, then what is everybody going to do? They're going to sell those shares that they just bought and profited substantially on because the outlook moving forward is still uncertain, right? So that was just such a phenomenal article to read. And that is going to be one of the key things today as to how I was able to take this sell on MNQ today. Reading that report in detail and seeing the key vocabulary word, I sent it to you guys in the Discord. I highlighted it for you. There was a report from JP Morgan that I read, and I didn't even have to finish reading the entire thing because I saw the word uncertainty remains. And I've tried to tell you guys that those are key vocabulary words that usually reflect in a risk-off backdrop for the day. So I said that this created a classic buy the rumor, sell the news. You guys can read thoroughly more about that in this report when I send it out to you guys. Moving on. We also, of course, still have the geopolitical uncertainty surrounding Iran remaining. Okay, that's all. I don't even have to tell anybody that's been a major driver of risk sentiment moving forward. So ongoing negotiations between the United States and Iran continued without any clear resolution that was at time of writing this, which was about an hour or two ago, which has left the market in a state of uncertainty. Analysts have emphasized that vague statements about constructive discussions are unlikely to reassure markets. And so I want to read this for you guys right here. It specifically says, this is from some analysts, but it says here, that would essentially be read as a nothing major was achieved. And that's if they just come to some positive negotiating conclusion, right? If they just postpone the events. It says here, the question would then become whether Trump is running out of patience for the diplomatic efforts. He obviously has to calculate whether this war would be something that he's politically willing to adopt as a cause that he's committed to. That is a huge if. If there's some kind of specific outcome of this round that at the very minimum tells us what the conversation is about, that might be seen as success. But just a statement foreign minister or by foreign ministers from Iran, just like last time, saying it was constructive. He said here in this report, that's not going to be enough for Washington. All right. So even if we did see some type of positive negotiating outcome today where they're like, okay, things were positive and successful and progressive, and, we'll postpone and we'll come back to the table. We have to remember that Trump wants a deal now. And so we don't know what's going to happen if that comes into fruition, if more threats are going to come into, on the table tomorrow or Sunday heading into the weekend. Like, we don't know. So even though that's positive leaning, that's good, it's better than nothing, it still leaves uncertainty on the table. And that's the environment that we're currently in. We're not seeing any further escalations compared to what we've seen over the last consecutive couple of weeks, but we're not seeing anything super progressive yet, right? Super progressive where we can all be like, yay, clap our hands, it's over, it's gone away. If we do see that, okay, that would be super positive. So I said here, markets are highly sensitive to potential escalation in this situation. A clear agreement or confirmation that military conflict would be avoided would likely serve as a major bullish catalyst for risk moving forward. On the other hand, any military escalation would likely trigger a significant risk-off event, driving capital into safer haven assets and placing heavy pressure on crypto and equity. So just be mindful of those headlines in the coming days ahead. Last but not least, we have the continued trade policy uncertainty. I have some key dates for you guys to be paying attention to in regards to the EU. So right now, President Trump's recent tariff actions and the Supreme Court decision to strike down previous tariff measures have created significant confusion. This is also another key vocabulary word that if you see, it's the same pretty much as uncertainty. Okay. Confusion regarding the future direction of U.S. trade policy. The administration has implemented now new 10% tariffs under alternative legal authority while signaling intentions to increase tariffs further. That is a key important sentence, intentions. The question now is, do they actually move forward with it? That would be negative and bad. Or do they not, and they dial back those intentions and they leave everything the same, creating and easing the market environment, all right? Meanwhile, key trading partners, this is important, including European Union, India, China, are reassessing their trade relationships with the United States. This is not good. This is what creates that uncertainty. Now that there's been a court ruling and there's going to be a whole bunch of shifting puzzle pieces, all the other jurisdictions that previously had agreements with the United States, you guys remember all that turmoil last year and all the volatility that created is now back on the table until things are clear again. So here in this report, I found a key date. It says EU lawmakers are expected to reconvene on whether or not they're going to halt their deal with the United States, right, on March 4th. Okay, so that's next week. We'll be paying attention to that date and any other new announcements from any of these other major jurisdictions in regards to the decision on the tariffs with the United States. All right, so that still, of course, lingers in the background as a possibility to either help the market sentiment if it improves or worsen the market sentiment if things remain uncertain. All right, so to finish this off before we roll over into the MNQ breakdown, I know that it's been lengthy, but I'm just trying to give you guys as much value as possible, and I don't see anybody else talking about this on the internet for their communities to really thoroughly understand the market sentiment. So I hope that it's been helping you guys out. Looking ahead, the most important catalyst for markets in the near term will be the upcoming inflationary data, particularly the consumer CPI report scheduled for release on Friday. Can anybody tell me why they think that this report is going to be very important considering what we've seen from Federal Reserve speakers this week? Can anybody tell me?
That's what they said they're looking at. Inflation's the key driver.
Long story short, every single hawkish Fed speaker that has talked over the past consecutive couple of weeks has pretty much stated that there's still inflationary risks skewed to the upside, that inflation is not coming down to their 2% target as fast as they'd like, which is making them hold interest rates higher for longer, in a nutshell, without going into too much detail. So tomorrow, the CPI report is going to be very important because if the CPI report tomorrow hints at lower inflation or cooling inflation or inflation that's not spiraling out of control, it's going to go against what the Fed, the hawkish Fed, has recently said and allow them to maybe possibly adjust their, easing outlooks. Okay. So I said here to finish this off, inflation still remains the single most important variable influencing the Federal Reserve policy decisions. If CPI data comes in lower than expected, it would increase confidence that inflation is moving sustainably towards the Fed's target, potentially opening the door for rate cuts later this year. Remember that the market's still pricing in 2 rate cuts, but they just keep pushing it back and back. What we don't want to see is higher inflation and the market completely witting out the idea of rate cuts this year. That would not be good. Okay. If inflation remains elevated, it would reinforce the Fed's current restrictive stance and likely delay expectations for rate cuts, which would maintain pressure on risk assets and likely lead to that consolidation or lower prices that I mentioned when we went over the total crypto breakdown. In addition to CPI, unemployment claims, sorry, we already went over this. We can get rid of that. Unemployment claims came out. Unemployment claims today, talking briefly about it real fast, came out slightly higher than the previous reading, but under the market expectations of 217,000. Remember, I've told you guys in previous unemployment claim breakdowns that anything below 221,000 is seen as a stronger labor market, as a more resilient labor market. We'd ideally need to see those unemployment claim figures come out above 221K to start to see the market get concerned about labor market strength again. And that has not happened as of time of recording. All right. So for now, the pullback in crypto and other risk assets appears to be a correction driven primarily by macro and geopolitical uncertainty rather than a structural shift in the broader trend. The key factors that could shift market sentiment back towards bullish continuations include softer inflation data supporting future Fed rate cuts, clear de-escalations in any geopolitical hotspots all over the world, because we also had Russia and Ukraine go over their, meetings today in Geneva, along with Iran and the United States. So any positive rhetoric from those geopolitical hotspots, any stabilization in central bank policy expectations. So, data that doesn't support continued rate hikes from the Bank of Japan, and data that doesn't support, or data that allows the Fed to consider possibly easing monetary policy later this year. All right. Reduced trade policy uncertainty. So major jurisdictions not retaliating against the court's decision and all the uncertainty and slapping on more tariffs and back and forth, right? Ideally, we want to see agreements. We want to see straightforwardness. We want to see certainty and clarity on the tariff front. What jurisdictions are going to be charged for what goods, where, when, what dates, what times, no postponing events, and real just solidification on that whole entire front. That would obviously, of course, reduce uncertainty. And then last but not least, any positive regulatory developments. Those are still lingering in the background and can always be a catalyst to take price action higher if we did see any major announcements from Congress, signing of any bills, anything that supports continued, investments into crypto. All right. Until any of these things emerge, till clarity emerges on these fronts, markets are likely to remain volatile and highly sensitive to incoming data and headlines. The coming days ahead, as we roll into a new month, are going to be extremely important. We're going to start off tomorrow's only the 27th, excuse me. So we're going to end the week or end the month of February with a huge data announcement tomorrow with the CPI report. All right. So that is the backdrop right now. That's what we need to be mindful of, paying attention moving forward. I hope that report helped you guys out understand literally everything that's happening in the market right now. I mean, there's obviously, of course, a couple of other different major factors. I'll give you a perfect example. Okay. On Twitter right now, what do you see everybody talking about? Jane Street, right? The Jane Street thing. Okay. You have to think, all right. Jane Street is big, 110%, but they're not the only player that is big in this market. And so anybody that thinks that it was just Jane Street selling the market and that's why the market was dumping doesn't understand how the markets work, because then that would mean that Jane Street controls all of the price action, and that's not correct either. So Jane Street was definitely one of the things that took place this week in the term of market manipulation, but all of these factors that I just went over today contributed to the risk-off backdrop. And when you see a conglomerate of these things point to risk-off environment, then all the hedge funds and all the asset managers and all the freaking, private family offices and even some of the big, large whale retail traders are selling their crypto. And so it results in sell pressure. Very simplistic, right? So hopefully you guys enjoyed that breakdown. All right. Any questions on the crypto front before we roll over into my MNQ breakdown for today?